Good afternoon and welcome to the 2020 Economic Recession and Preparation channel. I'm your host, Tony. Thank you for joining us on this Tuesday, November 19th, 2019. Today, I want to talk about the retail apocalypse. I told you this on the last video that this would happen, and today it has come to pass with the third quarter earnings expectations down, missing reports. Let's first start off with the department store Kohl's on Tuesday. Kohl's, KOHL, the department store chain Kohl's, as you know, on Tuesday reported weaker than expected third quarter earnings and cut its full year guidance. Kohl's stock fell sharply before the open today on the news. Now, these results follow rallies by Dillard's and JCPenney's, but as you know, JCPenney's was on the verge of being delisted from the New York Stock Exchange. They're hanging around $1.04 or so now as we head toward the close of the Dow Jones today. But we see that as the crucial holiday season comes up, my friends, we see that Kohl's is down. Another one that's down that I told you last video that would be down is Home Depot. Home Depot, the CEO had to come out today and do damage control, saying that the consumer is still strong, but we're being affected by the trade war and blah, blah, blah. You know, another dog and pony show here, but we know what the deal is. So Kohl's is down. Okay. Earnings came in at 78 cents a share. Revenue came in at $4.63 billion. But the outlook is that Kohl's cut its full year earnings per share target from the $4.75. They cut it, to $4.75 from $5.15, signaling a weak holiday quarter. Many experts have predicted Kohl's earnings would be above $5.11 a share. So, accordingly, Kohl's stock plunged 18% in the stock market today. Another big name, Nordstrom, fell 7% today. That was very surprising. And also, Macy stock took a 10% hit today. It was trading around the $15, $16 mark. It took a 10% hit today. Both retailers reported today. So, we can see stores, Kohl's, Nordstrom, Home Depot, down in the retail sector. We can expect this to continue as the back to school season is over in August and July. That's what helps some of the sales of these stores as parents are looking for back to school supplies and clothes for their kids, uniforms, etc. In the summer, that was in earlier April, May, June. But now that has passed, August has passed, this fourth quarter holiday season, we can expect extreme volatility in the Dow Jones. So enjoy your Thanksgiving. Enjoy your time with your family, your loved ones, and your friends. Continue to prep even during the holidays, because this next month, and this is not even counting, we're not even counting the trade war in China. We're not counting the civil unrest in Hong Kong or any other Black Swan event yet. We can expect volatility in the month of December. And so because of that, the Federal Reserve, the Fed, had planned on leaving rates unchanged, okay? That was what Jerome Powell came out 2 weeks ago and said that we're going to monitor it and all this stuff. But now it looks like they may have to step in and issue another rate cut. This will be the fourth rate cut if they do it on December 10th and the 11th, in the final Fed meeting of the year, in a year. This is unprecedented, okay? We're already at the Fed funds rate, and interest rates are already at between 1.5 and 1.75%. We don't have that much further to go before we hit zero, okay? We don't have that much ammo left in the tank, and that's why this 2021 recession in the beginning of the first quarter, depression or recession, is going to be absolutely devastating for a lot of Americans and a lot of people who invested in the stock market at the top of this bubble, because there's bubbles and everything. Remember now, we have credit card bubble, we have a student loan bubble, we have an auto loan bubble, a manufacturing demise. There's nothing being manufactured. And we have a retail apocalypse still ongoing. So what you can expect going into December and January is you can expect some companies to continue to have hiring freezes in both the public government sector and the private sector. You can also expect some layoffs, and you can also expect that companies that rely on seasonal employees, like say Amazon delivery, one-day delivery, Prime delivery, and UPS, FedEx, some of the other little retail stores that do online delivery, that will maintain some stability, but do not expect huge growth out of that either, okay? Bank of America analyst Ms. Hutchinson and Heather Braskley said that department stores' first half of the year disappointed investors, and also they have no longer overly optimistic about fourth quarter results. Okay, now keep in mind GDP growth in the third quarter was only 1.9%. Okay, normally for a healthy economy, GDP growth should be at 3% or above. So that tells you the dire state that our country is in, and it will continue to be in as long as we go through this slump. It's going to slow to a crawl, this economy, and eventually it's going to stale out and go into deflation. And that's going to be the absolute worst, because we're going to have deflationary recession turning into a depression. We're going to have no growth anywhere and a pile of debt. Remember, we still have $23 trillion in debt that the United States owes. So basically, we're making our interest payments on the debt. We're not even touching the principal. You know how it is when you're not touching the principal on your car notes or on your mortgages or any other thing. You're just paying the interest for the first couple of years. Okay, this is what the whole country is in. So no one is immune to this next recession and depression. I pray that everyone continues to get prepared. Stock up on silver, stock up on gold if you can, stock up on tangible goods, food, water, medicine, antibiotic, bandages. There's going to be a lot of things, a lot of unrest continuing. See, you notice the civil unrest is spreading from the east to the west. We have Hong Kong in turmoil. We have South America, Bolivia. Check out what's going on in Bolivia. Google it. Check out what's going on. The civil unrest in South America is increasing. Next up is going to be moving again into Europe. Turkey, Greece, Italy, okay, once their economies implode, Germany, once their economies implode, Spain, the Catalans, and all the independent stuff, once all that carries out, America's going to be next and experience civil unrest, not only because of the elections, but because of the economy, and people cannot find work, blue collar, white collar manufacturing. And so this is going to be absolutely critical that you continue to prepare. It's given us time now. The federal government has extended the budget resolution to December 20th. Okay, it's unprecedented again to have two budget resolutions without having the signature. So don't be surprised also if the first quarter of January or after Christmas we may have some kind of shutdown, government shutdown for 10 days or 12 days until after the New Year's. Okay, you know how that goes. So continue to prepare, continue to get ready, my friends, because this thing is coming and it's even on the doorstep. So thank you for joining me. I just wanted to give you this brief update, and I'll see you again soon, shortly. Leave your comments or questions in below, and I'll be sure to get with you what you want to see next, and I'll be sure to address them in the comments. Thank you very much. Have a great day. Bye-bye.